Good morning and welcome to Invest with Rules midweek update. It's the Watch List Wednesday. I'm Scott Bennett with the great Mike Olafson. It's November 19th, Wednesday. Mike, how are you doing? And are you ready for NVIDIA's earnings this evening?
Ah, I don't know if anybody is. It's going to be super interesting to see what happens. We kind of had this fun cartoon of how NVIDIA, like the entire market seems to be resting on what happens with NVIDIA. And want to get your 2 cents, Scott, but my fear is that there's going to be such a high powered microscope on the earnings that you're going to have the bears looking for any reason to sell into it, and you're going to be looking for the bulls, especially AI bulls, looking for any reason to buy into it, and it's going to be just a tug of war. What's your thought?
You know what? Let's save that. We're going to cover, we'll look at a chart of NVIDIA. We'll look at
Oh,
the
okay,
market
gotcha.
health.
Cool. Yeah.
We'll look at the top five stocks on our watch list. We'll look at the top five ETFs on our watch list this morning. We have a lot to cover that's going to be really impactful. So let's dive in. But before we do, per the usual, this is just information. It's not a direct solicitation to go buy or sell anything. Please always manage your process, your rules, your plan. You know the dance. Please manage your risk. There's a lot of risk out there we've just seen over the last couple days. So speaking of risk, Mike, tell us about the stock market score and what the S&P is telling us this morning.
Well, first of all, we can't overlook the obvious. What's going on with this chart, Scott?
Well, we are experimenting. We use a lot of different charting software. We're customers of TradingView, we're customers of Market Surge, and we've been using a Google sheet that we have stretched Google beyond its imagination of what they want from us, from ticker tools for members of Invest with Rules, our kind of spreadsheet newsletter, our video newsletter. And that's our paid version of our newsletter. And reality is so we've been starting to tinker. This is in very early stages of TradingView to code our trend roadmap onto TradingView. So we're going to look at that today. We're going to explore it. Hopefully it mirrors identically to the Google Sheets. If it doesn't, our apologies. We're doing our best. This is a way to move quicker. At some point, this will be an offering in the future and something that we want ourselves. So any other comments? And we'll get to the overall US S&P 500 analysis.
No, I'm super excited about it. And to segue right into the analysis, I'm safe in assuming the green line is the 21 EMA,
Correct.
the red line is the 50 SMA,
Correct.
and the black line is the 200 SMA, kind of mirroring the market surge charts that we've been using, right?
Correct.
Excellent. So we have the best of both worlds. So my analysis, and obviously want your 2 cents, Scott, is the market's at a precarious point where you're under the 21 day. The 21 day is now sloping down. You're under the 50 day. It hasn't turned yet. And I could tell you've put these couple of horizontal support points that I think are absolutely key to hold. So we're definitely range bound at this point, but that range, we're in the lower part of the range, and if the market fails and starts working through those support points, I think that it could be an interesting ride down. Your
Well,
thoughts?
yeah, here's what's kind of cool is so this is February, and at the end of February, it hit a coast. You actually hit a dunking break right here, and then it kind of went back to coast. And there's the 21 EMA, and it rolled over, and then it went into Liberation Day right here. And then we got our U-turn signal on the S&P. I think this was April 25th, maybe. So
Yeah,
this is where
about that.
our signal would have been to add a half position. Or we went into SPMO, which is more of a momentum play because that came the day before. And you can kind of see how it was in a U-turn where the short term's up, the long term's still down. And then you got this kind of big booming kind of resurgence, and we went to a gas signal early May. And what's pretty cool is you got the gas signal, it kind of undercut it but held it. And then it's been chugging up ever since on a gas signal, which is kind of coast is cleared, add more capital. And we just recently in October got a coast signal, and you got that head fake, and it's rolled over. You're back on a coast signal. Now, we're going to be updating this, but orange at the top of the bar is overheats, and green is our interpretation of there's a higher probability that the market could go higher. It doesn't mean it will. Life's about probabilities. There's no certainties in the market. So you're now in would be day three at the end of the day, but day three of a coast. You're still in a long-term uptrend. So for the longer-term investors, please manage your risk, but it's still going. The shorter-term investors, there's some pressure going on. You have NVIDIA earnings tonight, 6 out of 10. So you're out of the green zone at the moment of a strong uptrend. You're in this neutral zone territory. And because of that, you've seen us drastically reduce risk and you've seen our portfolio heat shrink. Okay, I've covered a lot, Mike. Before we go into the gauges, anything I missed?
No, let's go to the gauges.
All right, why don't you kick us off on the gauges?
So top four gauges. First off, market score we've covered. We're at a 6, kind of that the yellowish area, like Scott talked about. Percent invested, we just touched on as well. And our goal is to roughly be within 10 to 20% of the market score. And so that puts us positioned pretty well for what's happening in the market. Portfolio beta, no surprise, has come down as we have become less invested. The beta is going to come down. That's how we move versus the market. And then most importantly, the portfolio heat has now come down to a 2.6. So that means basically if all of our trailing stops got hit over the next 1 to 2 days, our portfolio would lose approximately 2.6%. Once again, no big surprise that that's come down from the 4s and 5s to 2.6, not only as we've been lightening up and going into cash to some extent, but also as the stop losses have been tightening up as prices have been kind of fading back. Anything to add, or do you want to jump into the actual gauges?
Yeah, what's up? You're starting to see more of this pink color show up. So you have break signals, meaning short-term, long-term downtrend in materials, real estate, staples, and Bitcoin. We are fully out of Bitcoin a little over a week ago. We did 2 sells. We share that in our advisory. We share that in our newsletter. We even share it in some of our free content. So we really want to manage risk and help investors manage risk. We would love for you to preserve as much capital as you can when things get pretty hairy. Could there be an epic bounce coming? Of course, but why not just wait for a U-turn or a gas signal? It's really that simple in our minds. We have a half position on gold. Gold's kind of holding up nicely, but you can kind of see over the past 2 weeks it's really pulled in. We'll look at gold and a lot of gold miners later. We have hedged our small cap position. I hope this is helpful. This is kind of just our inside baseball, what we're talking about here. We have a lot of healthcare exposure. We've added some energy exposure, not fun on a down day, but the reality is that the charts still look great. And you're seeing a lot of coasts. Want to go to the mega caps or anything else you'd add?
Yeah, no, I think you covered the gauge as well. I think Bitcoin, yeah, I think I mentioned this last video, but as of the last couple of days, literally all of the 2025 gains are now gone out of Bitcoin. Kind of sobering, and why we follow trends. As far as the S&P top 15 is concerned, kind of lines up with what Scott said about the sectors. You've got on the left side weakness, things like Oracle. You got Meta on a break. Visa financials have been kind of hard hit on a break. Retail is kind of getting a little shaky. Target is really warning that there are continued headwinds. So you got Walmart down on the left, no big surprise. Then as you work your way over to the right, healthcare, Eli Lilly, Google has actually been holding up quite well. So no surprise to see it on the right. You got ExxonMobil that's worked its way up. And yeah, anything you'd add?
Yeah, I mean, you saw 13F reports came out late last week. So you saw Warren Buffett buying Google, you saw Stan Druckenmiller buying Google. The funds that we've been tracking are holding Google. They have humongous positions.
Yeah.
They're still holding and accumulating a little bit of NVIDIA, but I would say that it's on a coast, so that's a concern for us. And we'll look at NVIDIA a bit later. So what we do in our process, we have the 6,000 stocks. We are looking specifically we do a cut for liquidity, a cut for fund buying. It's about $1 trillion that reports monthly. And then we're looking at multi-time frame momentum. And that brings us to our $1 billion fund manager list. We use from there, we're only going after things that are on gas signals or possibly half positions on U-turns. But coasts, we're very cautious. Breaks, we run for the hills. And we do the same structure for ETFs. And we give this to our members We thank you for being a member because we want to save you a ton of time, and we use this research personally for our advisory and for ourselves. So here is the top 10. There's about 100 stocks on this list, but the top 10, the list, the names on the list, the companies change monthly, but the rank is changed or updated daily. Anything in gray and full and fair disclosure, we have positions in our advisory, which means we're in it as well. So I would say the things that stick out is out of roughly 100 stocks, only 30 are on gas signals. That's not healthy.
Hmm.
40 are on coast, 30 are on break. Again, not healthy. These stocks at the top have done sublime, and you can kind of see how a lot of them are still on either gas or overheat. And some of them are doing like booming today. Let's see if that can hold. Lumentum, gas to an overheat, which makes sense. It's up 10% today, this morning. Any comments on the top 10 from the billion-dollar fund manager rank?
No, I think you nailed it.
Why don't you go over the ETFs? Because we're going to look at a few of these later in the segment.
Yep. So similar theme. We're showing the top 10. We are covering roughly 85 ETFs at this point. We have a new entrant since our last video, actually, GVAL, which is the Cambria Global Value ETF. And ironically, it rocketed right to the top. We didn't know where it was going to land, but when we did our algorithm, put it in there, came to the top. But the overall, I guess two call outs here as we look at the top 10 here. First off, exactly to your point, when we looked at the stocks just a few minutes ago, you've got only 25 gas signals out of 85 ETFs that we're covering. And you've got over 50 coasts and breaks. Not a great situation. So that's kind of definitely concerning about overall market health. And then as far as what is floating to the top, no big surprise. You got themes like healthcare, foreign ETFs are still kind of holding up to some extent, although under pressure. And then precious metals, interestingly, have started to work their way back up after going down in October, so working their way back up. What else do you see?
Same. I definitely don't see any AI tickers on here. I don't see any tech on here, so hope that's clear. Here's our watch list as of this morning, and we break it down into the top 5 stocks that are on gas signal from our rank. Then that's on gas signal that's in an appropriate risk unit. So if we were to take a position, what is that kind of where would our trailing stop roughly be? And it has kind of that extra momentum push that we're looking for from a volatility adjusted momentum. We're going to look at our top 5 ETFs and any signal changes. And this list changes throughout the day. We take action at the end of the day. Before we go into the charts, I'll just do it now. So again, thank you for being a member of Invest with Rules. If this could be helpful to anyone you know, just reach out hello@investwithrules.com or go to investwithrules.com. Thank you for that. If you're like, this is awesome, but I have no time and I want to follow trends, I want to follow big money, and I want to follow risk management, and I would really love someone looking over my personal finances as a fiduciary, it's hello at IWR Advisors. It's a totally separate business altogether, iwradvisors.com. Let's pivot to some trading view charts. So can you see this or I can't make it any
Yep,
bigger?
yep. See it well.
Okay. So we're going to look, I had it on Bitcoin. Just look at that deterioration in Bitcoin. It's pretty wild. So you can kind of see where we hit the break signal. It had a teeny bounce. Again, that black line is the 200-day simple moving average, and it has fully rolled over. It's so down low that it's in the volume. That's pretty ugly. So Bitcoin looks terrifying. I'm going to pull up a chart of, let's do like growth stocks, small cap growth stocks. So you've seen that go from about $40 a share to $34. This is a great company and a great basket of stocks, but not at the moment. So you can kind of see how when you got your April U-turn on the 24th and it rocketed, but now you're under some severe issues. And then I will show NVIDIA. So same story. U-turn on the 25th of April, gas signal on the 13th. And now here's how I see it is you have this kind of a wedge forming. You're under the 50-day. If you do get your implied volatility move of 7%, so it could go 7% up, this is where it could land this evening, or it could go 7% down. and kind of chug underneath that support area and fall into that congestion around 170. So, Mike, what say you? Any comments before we go through the watch list?
Yeah, so to anybody who is in NVIDIA, especially with a big slug of it, in other words, that it's an oversized position for your portfolio, whatever that means for your portfolio. So our process is that when we go from a gas to a coast, we'll oftentimes we'll reduce position size, especially going into earnings. However, if we have at least a full risk unit, which on NVIDIA most people do, whatever your risk unit is, say it's like 8% or 10%, if you have that in gains or better, you hold into earnings. So my advice to folks with big slugs, oversized positions of NVIDIA is to really think about, are you following your process? Or does your process call for you to reduce risk going into earnings? My personal or our process at IWR, my personal process would be to reduce risk going into earnings. But so anyway, I just want to kind of throw that out there because there's a lot, I think, of consternation about NVIDIA. We do have some clients in NVIDIA, but they're at appropriately sized positions that are not oversized. So we're going to ride it into earnings, but obviously watch it closely with the reaction.
Yeah, and Mike loosely used the word recommendation. This isn't a recommendation. This is all fun and educational.
Yes,
So,
thank you.
so I hope that's helpful. So we're going to go through some charts. So obviously, if you're seeing McKesson, a healthcare company, show up at the top of our list, that's kind of interesting that that is not AI, that is not tech. This is a you can kind of see how it went from break to U-turn. It gapped up, a healthcare stock gapping up, and it gave it all back and it held the 200-day simple, but it undercut everything. And then it kind of formed some version of a base and has been riding when to another base. We got our gas signal, and then it retested the 50-day, and it's been off and running. I'm looking for a breakout, but it's on possibly an overheat. So it's teetering between overheat and gas at the moment. But what say you about McKesson? Anything else stand out to you? Like what number billion-dollar fund manager rank is that today?
Yeah, it is. It is currently number 7 on our billion-dollar fund manager rank, so it's up there definitely. No big surprise considering the performance and healthcare in general. And it's been on its long-term uptrend for over a year now, 378 days, a 56% return, definitely beating the market, not too shabby. So if you are a simple buy on green, in other words, or add on green gas, and then reduce or sell on break, you're still in this trade and you're quite happy, but obviously manage your risk regardless.
Yeah, and this you can kind of see how it can come down to the 200 day. So it's up there, but we're watching it.
Yep.
So we don't have a position. Insulet, we tried a position and got shaken out, but Insulet is currently on a gas, which means short-term and long-term uptrend. You can kind of see how it had a really volatile earnings reaction, dunked under the 200 day, and now it's kind of trugging back up above the 21 EMA, above the 50. And I'll draw a fun trend line if it will let me, something like that. And if knowing myself after all these years, if I'm showing a line like this, I'm going to go to like a monthly chart, and you just broke out of a very long-term consolidation. If you like following on Twitter, like Dr. Wish, he's a fun follow. They would call that a green line breakout. So as long as it holds the green line breakout, that's really healthy on a monthly chart. And what say you about Insulet or the ticker PODD?
Yeah, it is number 24 on our billion-dollar fund manager report currently, and it's been in its long-term uptrend for 530 days now. So going on a year and a half, 76% plus return so far.
Yeah, so you can see it right over here,
Yep. Yep.
which I had to scroll all the way back to last year.
Exactly.
Mike, near you, Hershey, Pennsylvania.
All right. Hershey, first of all, as Scott is pulling the charts up, I'm pulling up our ticker tools so I can give you all the kind of good background data. But Hershey, you kind of see it's coming off a break. It went from break to coast to gas most recently a few days ago. It's been a choppy kind of chop fest. And so if you've been in it, oh yeah, yeah. And it's actually flirting that trend line. So if you're in it and you're simply waiting for a break, you're in good shape. But But if you're not in this thing, I'd let the chop kind of continue to happen and wait for, or yeah, there you go, a more legitimate buy point. What say you? Oh, and
Yeah,
by the way, I should, before I flip it to you, it's number 31 on our billion-dollar fund manager report. And yep, and it's been, there you go. There you go. Thank you. And it's been on the uptrend, the gas signal for 8 days now.
well, that's interesting. So here's an example of maybe it's not correlating perfectly with TradingView. So we'll look at that one in particular.
Well, remember, it's 8 calendar days. So trading days, it's been six, what, seven? It's in the seventh trading day, right?
Okay, so there's the 14th. So 17th, 18th, 19th. Okay,
Yep,
that's
that's good.
so
Yep,
calendar versus trading days.
correct.
Franco Nevada. So FNV, short-term, long-term uptrend. Look how far this has come since the gas signal on January 2nd. So Franco Nevada has been kind of booming. It's had a couple pauses, but no such thing as a break signal. And it is forming some version of the bottom of the base. And this would be kind of an early cheat, is what some people would call, to see it's been giving up a lot of today's gains, which isn't healthy. You're back below, but you're underneath the 50-day. But this is where an early cheat, could you see a stock like a Franco Nevada back up at 225 at some point? That wouldn't shock me. Any thoughts on FNV Franco Nevada?
Yeah, it's number 33 on our billion-dollar fund manager report. It's been on a long-term uptrend for 321 calendar days, up 60%, not too shabby. So if you're long-term, it's been a good trade if you got into it at that point back in January. And from a pure short-term standpoint, although you see some chop of late going from gas to coast and back and forth, if you're simply a buy on gas, sell on coast. If you're a shorter term trader, you've had some good trades here, especially going back to that August through mid-October trade.
Yeah, and we'll move to our ACLX. So biotechs, that's why we tend to like ETFs because some of these don't have earnings. So always be cautious. But you can see the gas signal occurred on September 11th of this year, and it's done really well. And if it's been choppy because this is a reality of a biotech stock, but you can kind of see a monthly chart where it's forming a massive cup. And biotechs have really come to life. So, in full and fair disclosure, we own the healthcare ETF, we own the biotech ETF. We'll be looking at XBI in just a second, but this is clearly a place of rotation. But short-term, long-term uptrend choppy. So I would, if it were me, I'd position size down because that's scary to me. But any other thoughts on Arcellx?
No, Arcellx is number 37 on our billion-dollar fund manager report.
Cool. Why don't you cover, since we don't need any more ranking at the moment, XBI?
So XBI is one of the biotech ETFs, and you can see just how well it's actually moved since that latest gas signal. So back on August 13th, it hit the latest gas signal and has just been moving along, chugging along nicely. In this case, ironically, riding the 21 EMA quite nicely and not even flirting with necessarily closing below it. It's touched below it intraday a few times. And by the way, this is just a good example where this is why barring a really significant market down day, we always make our decisions at the end of the day because you get this intraday kind of shakeout if you have hard stops in. But this is a good example of that. So yeah, at this point, Scott, it's been a super good trade. What say you?
And I think one of the biggest challenges of any system is that there's a lot of greatness to it, and there's also nothing's perfect. But I would say you had a lot of overheats coming, so that would have been an area where we would not have added anything. And you had a pullback, and it had a pretty rough shakeout, held the 21 EMA, and you got your, in our technical opinion, this was a coast is clear gas. So when we would have taken more action, so we have a couple of ETFs that are of healthcare related. And you can kind of see how it's been doing well ever since. So we'll see how today shakes out on super low volume. We'll go to silver next. So we have a full slug of silver in full and fair disclosure. That's a cup. That might be a handle. I'm going to go to a monthly chart. So if we go back to 2011, if you remember that, that was your high at roughly 50 bucks. Not inflation adjusted. It has been tortured people for about 20 years. And lo and behold, it has rocketed up and out, and it sat down right on top of this support. And now you're flirting in this range with another breakup. So could this work? Could this hold? You have a lot of overheat signals starting here, our retest, and I think we added more right here, if it serves me right. We added our second half back. So we had a big slug of SILJ, which is silver miners, which we'll look at SIL. This is one of them has a very large Wheaton precious metals position. But when it went absolutely wild vertically, we started selling into this based on relative strength index that was, what is it, over 80, over 90? It was really high from recollection.
Yeah, 88. Yeah.
Yeah. So you can kind of see silver is, I mean, if you look at a monthly chart, this could go a whole lot higher, but could you backfill first? It's possible. So silver, any thoughts on silver, or we'll go to the miners?
No, let's do it.
Okay, so here is your GDX. Had a really strong morning and a bit of a fade this morning. Any thoughts? So short-term, long-term uptrend. Here's your most recent gas signal. Here is where your gas signal started after the most recent break. So all the way back in January, and it has been a
January 8th. Yeah.
phenomenal trend.
Yeah, January 8th. You almost, if anybody got into it at that point, you're flirting with long-term capital gains now in a taxable account. So something to be mindful of. But yeah, it's just worked tremendously, nicely going up. Now, if you're a short-term trader, you've had some good kind of gas signals and been able to catch that trend. If you're a long-term trader and riding that long-term uptrend, you're up 111% so far.
Yep. Any thoughts if you were to look at the difference between GDX and GDXJ? So now we're going to the juniors.
Yeah, I'll make a bet if we do a correlation chart, obviously not too far off, but I'm actually going to pull it up on the ticker tool as well. See if there's any difference in the long-term trend. So GDXJ actually triggered its long-term trend a couple of days earlier, and it's got a few percentage points more, 116% versus 111. So
Yeah,
just a little bit earlier gas signal.
which makes sense. It's more volatile. It has there are smaller cap companies in the mining space. So they're showing up, they're on gas. It would be nice if it could break up and out, and then could it retest highs, or will it fumble and fade and retest these lows? We don't have a position in the miners for gold specifically, but that would be something we'd entertain. Tail. Tail is a Cambria fund that buys puts. So Cambria is betting in this particular fund that NVIDIA does poorly and the S&P has some serious issues, and this should rocket higher. So if you look back on end of February, it went to U-turn to gas, and then it faded as a volatility squeeze happened. And then you got your Liberation Day. It got another gas on March 28th, went to a wildly high peak on April 7th, which was your actual low, and then gave it all back. But it's still sitting on a gas signal. What say you, Mike?
Yeah, and this is an interesting one. This is a possible tool to hedge. It is not officially, excuse me, it's not officially in our fleet of ETFs to hedge with. We use the three major index ETFs, inverse ETFs, but this is one I think that one can consider as possibly a hedge tool as well.
Yeah, let's just take a peek at it while we're here. So yeah, we added a half position on RWM, which is inverse small caps, and it's
Yep.
on a U-turn. So we're watching that one. SIL will look identical to SIL J, which we showed, or it looks really similar to the miners. So the gold miners. So there's not much more to add here, but is having a more productive day than the gold miners, just from a performance standpoint. And then sometimes, some ways, things jump out at you. And whenever there's a new signal change, which may or may not happen today, at the moment, I don't think it's happening. But is it on gas or coast for Carvana?
It is back to coast. Yeah, it's back to coast.
Boop, adios. So let's stop there. So again, first, thank you for being a member. If that's something that's of interest to you or your family or friends, just reach out to us. Hello at investwithrules.com. Thank you so much for watching. If you are not a member but considering it, consider subscribing to our YouTube channel that we're trying to show a little bit more life to. That's important to us. in 2025 into 2026. Mike, final words on the watch list Wednesday.
No, no, I think you covered it, Scott. Just a happy Wednesday, everybody. Definitely mind your risk, especially with NVIDIA reporting after hours. We'll talk more about it obviously on Friday, and you'll see us on the live sheet taking action as necessary.
Awesome. Again, thank you for your time. Enjoy your week. We're here for you. We care about you. Trade well. Talk soon. I hope this helped you identify some uptrends or things coming to uptrends, but please always do your due diligence, manage your risk tolerance. This is not a direct solicitation, just things for your watch list. I hope it was helpful, and I'll see you at investwithrules.com.